Hey, good evening, everyone. It is October 7th. The market has closed, and we're seeing what happened. The market did sell off today, and some stocks sold off quite quickly. Tesla is down 4.45% as an example. Salesforce is down, Uber was down. Google gave up some of its recent gains, down 1.86. There were some good areas of the market, consumer staples, which is where investors go when times get a little risky, a little scary. They go to consumer staples. And it looks like some healthcare stocks did well. Healthcare plans look to be doing okay. I think the government shutdown is, I think, requiring that the two parties negotiate what's going to be funded. And I think the health care plans are going up because one side is insisting that health be in funded, healthcare be funded, and if it is, then those healthcare plans will benefit. And I think some other stocks also caught a bid. AbbVie did well. Gilead Sciences did well. Financials did fairly well. Looks like the insurance sector did well. Berkshire had a good day. And AMD continued to rally. AMD had that real positive news where OpenAI is going to own, I think, 10% of AMD, but they're also going to use their chipset and really use it for a data center they're building. So I think that was really positive news for AMD. Now, OpenAI is a privately held company, and boy, they're making a lot of agreements, and hopefully they have the money to pay for all of them. So thanks for joining, everybody. We've got Shadow Guy. Looks like Shadow Guy, you're really busy today. You bought some Amazon, Orla, BCS, AEM, and Meta. Amazon was your biggest dollar amount. You know, Amazon's not been keeping up with the other mega caps. And I think Amazon's a really, really good business. And I've been buying up the stock as well. I bought Amazon today. So, and I bought it, I think, early in trading, and it went up by the end of the day. And I've been buying Amazon every week. I want that to be one of my big positions. Meta's already one of my big positions. I'm not familiar with Orla. Let me take a peek at Orla. I think we've looked at Orla in the past, but I forgot what they do. Mining. Look at you going after a mining stock. That is awesome. This stock's really worked. Holy smokes. Get out of the way, NVIDIA. The real money's being made in mining. Orla Mining acquires, explores, develops, and exploits mineral properties. It explores gold, silver, zinc, lead, and copper deposits. How interesting. I hope that really works for you. Mining stocks, like physical mining stocks, have not been my forte. So I hope it really works for you. It looks like this stock's just been a total winner. Seems like a good pickup. Another stock that you picked up was BCS. Barclays, financials, right? So financials, banks, and banks have been doing quite well, their stocks. This one's up 69%, year-to-date 53. Man, this is doing great. And I think Barclays is a British bank, $71 billion market cap, pays a dividend. And I own Citigroup. It's been doing well. I imagine Barclays is doing really well. If we can get through kind of like this slow period in the economy, and banks, I think, are going to do well. We got lower interest rates coming. Hopefully they know what to do with that and can do well. So that one looks interesting. And then the other one that you bought was AEM. AEM. Another mine. Agnico Eagle Mines Limited. Agnico Eagle Mines Limited, a gold mining company, engages in the exploration, development, and production of precious metals. All right. Well, I hope this really works. There was a lot of news with the U.S. government taking a position with one of the, I think, precious metals, or what do they call it? Rare earths company that is going to be mining in Canada or Alaska. And that was interesting that the government did that. It sent that stock way up, like 150% in a day. And it looks like these mining stocks have been a really, really big win for investors. So I hope it continues to go up for you, Shadow Guy. Really busy day for you. It looks like Mike, how you doing? Yeah, this channel is not for passive investors. This channel is for those that want to be active in investments and learn along the way to become better and better investors and get a better and better rate of return. And just think about, 10, 20 years from now being that much better because you invested time in learning, getting to know the markets, when to take advantage of certain situations. And it becomes quite fun instead of it just being surprised by the market. You take advantage of the market, making or having particular trends. So you're right. This channel is not for passive investors. It's not for spectators. This is for people that want to learn and become better investors. It's great to have you guys. Pedro, how you doing? Good to see you. Herdo, great to see you. And then Mike, the last 2 days, you've used almost 40% of your cash. You need to slow down. Yeah, I'm going to get into a couple of topics that relate. I think we could see a substantial sell-off, and I'm going to get a little deeper into that in a few minutes. And part of the setup for my thinking along those lines is that stocks have gone up so well. Now, that's not the only reason I think the stock market could sell off considerably, but I think there are some other factors that could weigh on it. One of it is that, we have a lot of investment related to the data center and a lot of investment related to AI. And I think that the AI, the innovations around AI are going to take a while. Investing, you're looking at a 1 to 2 year performance horizon. A business has to kind of prove that they're on the right track each quarter, and investors will be patient for maybe a year, 2 years max. And if you have episodes where you have some fear introduced into the market, man, all bets are off. A lot of investors abandon those long shot kind of investments. And I think that's what happened during the dot-com bubble. When it popped, a lot of the businesses were terrific and they continued on and they became massive companies. But in the near term, investors that cashed out lost a lot of money, and it got pretty darn, scary, demoralizing. And, that could happen if we have a big sell-off. But I don't know that we're going to have that type of sell-off, but I would not be surprised if we had another nice 10, 15% sell-off in the next, 3 to 12 months. All right. So Falls Grave, good to see you. You bought IT and Adobe. Am I bullish on Airbnb? So the short answer is no. I've kind of lost some confidence. I guess I'll start with Airbnb and then I'll look at IT and Adobe. So Airbnb, I really like their business model where they're doing home sharing, and they're the number one player when it comes to pure, like, the sharing economy where you can go stay at a home and so forth. but the growth of the business is not good enough. They had really good growth for a couple years, and now they've slowed down. 12% the last quarter is good. 10% is decent, but they're not the biggest company in the world, 11.5 billion. And if they could figure out how to grow faster, then we've got something. I think one strategic, weakness they have, or maybe they should have been thinking ahead, was acquiring businesses, right? Like Uber, they acquire businesses. They acquired the food delivery business. I think it was Postmates that they acquired. And you acquire businesses that are going to complement your core business. And I don't think Airbnb has done enough of that. They could have acquired travel related businesses and made themselves bigger, more valuable, and kept this, kind of enabled better growth. They haven't done that. They've tried to grow from the inside out. They're trying to grow their experiences portfolio. It's just not growing fast enough. That's my biggest concern. The other concern I have is travel seems to be slowing down. Travel 2 years ago when we were getting out of COVID, boy, everybody wanted to travel. And I can understand why. We were cooped up for a long time, and it's time for people to travel as much as they could. So I think Airbnb benefited during that time. And I guess the last comment I would make on Airbnb is you can always, it's all about comparing a business against its peers. And probably its strongest peer is Booking. And Booking was a merger of two big businesses or substantial businesses in the travel industry. The two businesses were Booking, and the other one was, I think, Travelocity, Priceline. And Booking was, I believe, originally from Europe. And I personally did business with Booking. I had short-term rental properties that I rented out on Airbnb and Booking. And I remember the original agreements that I made with Booking to list our properties on Booking. The company was headquartered in Amsterdam. So that's why I thought, okay, Booking's in Amsterdam. And Booking is growing at the same percentage, but they're way bigger than Airbnb. So this really is more impressive because they're growing at a greater, dollar number than Airbnb, capturing a bigger portion of the market. And these guys, they were not afraid to merge, to do, be acquisitive, I guess. And you see their market cap's more than double what Airbnb has had. Over the 1 year, this is up 25%. It's not having a great year, but over the 5 year, it's up 200%. Airbnb, year to date, it's down. 1 year, it's down. 5 years, 76%. So the market, and I would have to agree with the market, believes that Booking has been operating better than Airbnb. Now, I'm not bullish on either. I think both of them are going to struggle with travel. I don't think travel is going to boom again like it did a couple years ago. But I would say that Airbnb was outmaneuvered, was out strategically Booking out strategized Airbnb. And I'm a Airbnb stockholder. So I'm just trying to call the balls and the strikes, trying to be somewhat impartial, or I can't be impartial. I'm a stockholder. I'm just trying to see the facts for what they are. And I think Booking outperformed Airbnb. So I'm not bullish on Airbnb. And I've been actually selling some shares. I think I want to keep Airbnb. I certainly want to listen to what they're going to say on their earnings November 6th. But some stocks, some companies, that's why I watch them, is I want to know, strategy, is it working? Are they continuing to execute their business plan effectively? In the case of Airbnb, they've fallen short. Now, the two other stocks that you brought up were IT, Gartner. Yeah, these guys have been hit pretty hard. and you bought Gartner today, I think the threat to Gartner has been that if you ask ChatGPT or Gemini, because Gartner, first let me introduce the business. I know Gartner quite well, but I don't know that everybody does. So Gartner operates as a research and advisory company in the US, Canada, and Europe. So it does a lot of research, and it has this famous quadrant where it will rank software programs. It'll say, hey, here's the leaders quadrant and the up and coming quadrant, the laggards, and so forth. And it's a respected body of work. So a lot of what Gartner provides, I think, is going to be challenged by AI. And I could totally see, because like I have Gemini open and I could say, what is the leading CRM software for large companies, right? So I could ask Gemini or ChatGPT, name your AI app of preference, and I'm not sure why this is still on credit spreads. I asked Gemini about credit spreads, and I'm not sure why I was doing that. It's still giving me that. All right, so let's start this over again. Well, assuming that Gemini would work properly, you could ask it questions, and the answers it gives you are pretty darn good. Like typically, when a company is shopping around for new software, new technology, it'll refer to Gartner because it's a respected source of knowledge and reference and opinions. And now you can ask ChatGPT and Chat GPT and Gemini and anybody else. They're probably going to reference the same information that Gartner is publishing. So let me see if I could ask it a question. Hopefully it doesn't come back with something went wrong. Geez, my Gemini is not working. How funny. I was trying to demo it. All right, but you guys get the gist that Gartner is going to be eyeballs are going to go away from Gartner, and they're going to go to ChatGPT. They're going to go to Gemini. They're going to go to all the different AI apps. And I think that is clearly a threat, that Gartner no longer is going to be needed as often. So that's, I think, the primary reason why it's sold off so much. Now, is the sell-off, is the story real, or is this an opportunity? Because if the story maybe is that, oh man, they're going to be completely worthless, but it's not going to be the case. Maybe Gartner's still going to be a very important information source for big decisions for big companies. So let's take a look at their growth and see what's going on. They're going to announce on November 4th. So we're less than a month away from their earnings. It's a relatively small cap, 18.58 billion. Revenue is 6 billion. So not too expensive. PE ratios are low. Analysts think it's discounted. So they are growing single digit. So they are being disrupted. It hasn't shown up quite yet. And one thing that I have seen published, like MIT published that 95% of companies have reported that they're not getting great return on investment from their AI investments. And that's the place for Gartner. Gartner should be publishing like, hey, what's going on with AI? Is the AI investment worth doing? So that could actually be a revenue generator for them. So their growth is pretty decent. Let's take a look at free cash flow is expanding. That's good expansion of free cash flow. The chart is up and to the right. So 1.5 billion. They're growing single digit, but they're growing. Gross margins are good, 68%. Profit margins are good, 19.7. Full year last year was 20%. So the fundamentals look really good. I know the story is threatening. I think that's why they're selling off. When we look at the forecast, we've got 8 analysts covering Gartner, and they think the stock is discounted by 37%. The forecast is that they're going to continue to grow. So there's no disruption that is being, seen by these analysts. The analysts are seeing that Gartner is going to continue to grow. Now, one thing that I've seen in software, and Gartner is coupled to software technology. But companies like Salesforce, the fundamentals are good. Adobe, ServiceNow, those are really good businesses, and the market's selling them off. The market believes that there's going to be some disruption there, that we're not going to need those softwares, or we're going to need less. And to this point, it hasn't shown up in the fundamentals of Salesforce or ServiceNow or Adobe, but the market's kind of sticking to that story. And it looks like that story is getting to Gartner. It's down 49%. So if we have a turn in sentiment toward, big software and Gartner, this stock's going to work. I think it's really discounted at a $1.5 billion market, free cash flow generation per year. I could easily value this business at 30 billion. It's in the cards. It'd be worth about 30 billion less debt. And I don't know how much debt they have. It looks like they have a little bit of debt. So in my opinion, Gartner is worth like 30 billion. And if you have a lot of projects and a lot of investing in technology, it's actually worth even more, because that's when companies really look to Gartner to help them make a good selection on the next big technology they're going to buy. So that's a really discounted stock. The fundamentals look good. It's just this story that the market is running with, and we'll see if that story turns, if it changes, or if the story ends up being correct. I don't think it's going to be correct. I don't think all software companies are going to be like pretty much not needed in the next 5 years. I think it's going to take a while for AI to really be baked into software programs and so forth. And Adobe, I kind of spoke a little bit about Adobe. Adobe has really been held back by the same story, which is, how's AI going to affect Adobe? Adobe provides software for creative people that are creating videos, images, really good graphics. And ChatGPT just came out with Sora. So that's supposed to help creative people with Sora, which it's artificially creating images, artificially creating even like movie scenes and stuff like that. Is it good? Is it bad? I don't know. I haven't looked at it. I can tell you Adobe's the leader in their space, and they haven't been disrupted. They continue to grow. And they actually have their own AI products, and they're competing to be the leader that businesses will appreciate. Like, hey, I'm going to use the Adobe suite, and it's going to have AI tools for me to use. So this one here has caused me to scratch my head, because the fundamentals look awesome for Adobe. It's growing well. It's generating a lot of cash, high gross margins, high profit margins, and high free cash flow yield. So the fundamentals look great. And I believe they have more cash than debt. They have a little bit of debt. They have $710,000 of debt. So I think Adobe is a terrific business. I own the shares, but the market just does not like Adobe, Salesforce, ServiceNow. Like the enterprise software space is being put off to the side. The market's not liking it. It likes data center specific technologies. If you're a CoreWeave, they love you, even though they don't make a lot of money and they have to put a lot of capital into those data centers in order to offer cloud infrastructure services. Or if you're a semiconductor company in the data center like Broadcom, it's become so priced very high. And I think at some point, those fundamentals are just not going to, they don't look good now. And I think they're going to look terrible in about a year or two. So you were busy today. Good luck with IT and Adobe. I hope they really work for you. And then Mike, wow, you bought 25 stocks today. You bought Salesforce, Monday, Cake, which is Cheesecake Factory, SentinelOne, and you got Meta yesterday. And I think CRM yesterday had a good day, and then had a bad day today. Interesting how just one day difference. Let me go to the 5-day. Yeah, yesterday it had a really good day, and then it gave up some of those gains today. Year to date, this is not doing well. And this is another one where the fundamentals look great. This is a PE of 34 moving to 20. This is a big business. It's growing at 8%. That's very profitable, generates tons of cash. Look at this cash, 12.5 billion, very high gross margins, good profit margins, great free cash flow yield. Just a very good business. When will the market start to weigh the value of Salesforce, of Adobe, of Gartner? That's the thing, is investing, long-term investing. We got to be patient. We got to stick to the investing recipe for success. That's going to work for us. And then Monday, that's a good discounted small cap software company, Cheesecake Factory, restaurant. And then SentinelOne. I think SentinelOne is a good growth stock, or if I have them correct, they're growing well. 25%. They are a little small and great gross margins. They're losing money because they're small and they make a little bit of cash flow. So hopefully this one works for you. I'm in Fortinet. I'm riding Fortinet. I rode the name escapes me for the moment, but I'm hoping that Fortinet is going to get the job done for me within cybersecurity. But I think SentinelOne is growing, and I hope it really works. Yeah, thanks, Mike. Good to see you. 25 stocks in a day. Whew. All right, so yeah, I think Chasen Moses. I think if the market's doing really well, I mean, all things considered, right? We've got a market that is doing terrific for the year, and I think people are like, if you're part of the investor class, if you own stocks, if you own real estate, if you own assets, you're feeling pretty good. 14% year to date, 1 year, 18%, 5 year, 93% on the S&P, right? So you got to buy a new car, no problem. I'm up big on the market. You want to take a vacation? Yep, can do it. If you're part of the investor class and you're empowering yourself to really have the rising tide of valuations lift your boats and lift up your stocks and your assets, and you have great appreciation. So that's the trick to it, is amassing enough wealth where, the appreciation of your portfolio is outpacing your ability to spend your wealth. And this year has been a good one. People feel comfortable, those people that own assets. On the flip side, you know, the folks that are not savers, they're not investors, they're just consumers, it's just going to be tough for a long time. It's good to be an investor. All right, good stuff. So, Mike, QFin, Pinterest, Root all had a bad day. So, I like Pinterest. I think Pinterest is going to be a winner down the road. I agree that the market's been selling it off. Root, I really like Root. I think we're going to wake up and Root's going to be a big company. QFin, I'm not as confident around. I think QFin's way over in China. They're not growing fast enough for me. But let's take a look at Pinterest and Root. Let's start with Root because I'm more excited about. I like them both, but I think Root has a neat business. What does Root do? Root provides insurance products and services in the U.S. The company offers automobile and renters insurance products. It operates a direct-to-consumer model. It serves customers primarily through mobile applications and its website. The company's direct distribution channels also cover digital media, independent agents, and referrals. Okay. And let's look at their website because I think it's important to kind of get our heads around what they do. So Root basically is trying to get customers that need insurance for their car, for their, I think, a variety of products. Okay. And I'm sure you notice when you watch a football game, there's no less than 2 or 3 insurance companies that are advertising, and they use athletes quite a bit. You have Allstate, you have State Farm, you have Geico, you have there's like 5 insurance companies because the customer acquisition for an insurance company is one of the primary cost drivers. But what if a company comes along that says, we're not going to advertise like the old school insurance companies. We're going to be fully digital and we're going to get customers in a different method. That's Root. So they're doing this. They're acquiring customers in a different way. I like that about them. The reason I like them is they're doing it in a way that's very different than Allstate, Progressive, and these guys that are just battling each other to get more customers. These guys are doing it different. Okay, I like your idea. Let me see if I like your fundamentals. Small cap, 1.26 billion. Revenue about 1-to-1. Okay. P ratio 17.3. That's pretty low. Forward P is pretty high. So I'm going to take a look at that. Analysts like the business too. They think it's discounted by 59%. Year to date, it's up 12%, but you could see this volatility. Welcome to small cap land, where you could see stocks go up to $177 per share from $73 and then come back down to 81. All right. So this whole new way of doing business, it's working to get customers. Okay. They have 1.3 billion of revenue and they're growing at 59.7%. That's a very good growth rate. And when we look at, can they turn that into cash? Yes. Can they turn that into profit? Yes. And their free cash flow yield is 14.46 and they're small. As they get bigger, that's going to get better. So I'm seeing good fundamentals for a small business, for a young business. and I'm seeing high growth rates. That's why I'm excited about Root. I could wake up and Root could be the next Robinhood. It could be the next, really fast appreciating stock, because once they get a particular customer acquisition model that works for them, hey, that's a major part of expenses for an insurance company, is the sales and marketing. And if these guys figure out a less expensive method to acquire those customers, they're going to be that much more profitable. And I think they're going to be more effective. I sit down for a football game, I might see commercials from 5 different insurance companies. And at least 4 of those companies wasted their money, because all he needs one insurance company. Why are 5 advertising? So there's a lot of wasted money if you do it the old-fashioned way. So that's why I really like Root. I like their story. I like their idea. The fundamentals keep me in the stock. I own shares. I'm not buying any shares the way that I'm approaching the market, because I think it's an expensive market, is I'm buying a good position and I'm going to study their earnings closely and then reassess and see, hey, do I want to buy more shares? But I like the stock. I like the stock a lot. What's it done for the last 5 days? Gone down over the last month. And again, it's really sold off. I'm down on, my investment, but we'll see how the earnings come and what it does. You see these big pops, right? If they announce in early November, that means in early August, they announced and they sold off after the last announcement. So we'll see how they do. I really like the Root story. And then Pinterest. So Pinterest is very underappreciated and undervalued. Analysts agree with me, but you look at these fundamentals, it's a small cap, 21.3 billion. Revenue is 3.9 billion. So you're paying about 5.5 times revenue for the business. P ratio is really low at 11.45. PE for the S&P is like 26. So this is well below the S&P average. Forward PE of 16, again, way below the average. Now you would think with a low PE, these guys aren't growing. And that's actually, they're growing. 17% growth on almost a $4 billion number. That's excellent. Okay, that's really good growth. But are you profitable? Absolutely. 80% gross margins, 49% profit margins. I love these fundamentals. So I have a pretty good sized position of Pinterest. I'm not buying any more shares. My position's been built. I'm going to study their earnings. I've made a lot of money on Meta. I've made money on Reddit, and I want to make money on Pinterest. I think I'm going to make money on Pinterest. This is a juicy acquisition for like an OpenAI or any business that wants to immediately get how many users that are daily active users, monthly active users, so they can introduce their AI technologies. So this is, I think, a good investment for me, and the fundamentals are terrific, and it's nicely discounted. So Pinterest is a really, really good looking company from a fundamental perspective. And to show you the valuation on Root and Pinterest, Pinterest has a 60% discount. Its cash flows are really good. It's growing really well. It has a terrific balance sheet, has $2 billion of cash, only $25 million of debt. So this business is like, they could operate and keep growing at 15 to 20% a year, become a $20 billion business at some point. But I think before then, they're probably going to be acquired or something. There's just too much value here. And Root, look at that discount. So When I was valuing Robinhood 2.5 years ago, I was like 85% discount. I was like, wow, that's a pretty good looking number. And it did it. I think if they're successful in acquiring customers and they can do it a different way, they becoming extremely valuable. It's not just an insurance company. It's an insurance company that built a mousetrap that is more effective than the other insurance companies, and they're more profitable, and they're going to grow faster, more sustainable growth. They're going to carve out a niche that their competitors can't touch because their competitors are just, you know, excessively advertising through commercials on linear TV, which is the old school method. And these guys are like, hey, we don't play there. We play using methods that we're really good at and are very new. So I like Root. I like Root a lot. And then QFin, I'm not confident in that one. I'm not an owner at QFin. And those are my comments there. All right. Chris Barnes, thanks for joining. David Knight. So AMD, man, I think Mike was in AMD. He's asked about AMD for a year. And in a way, he's kind of forced me to look at it and go, look, this is a really good opportunity. And I didn't listen. I didn't see it. And I've seen some other, I've gotten some good hits and I'm doing great, but this one I missed. And thank you, Mike, for bringing this one up. This is absolutely a winner. Year to date, 75%. Over the 1 year, it's kind of weird because it's 23. It did sell off quite a bit in 2025. I mean, everything sold off in March, April. But this one kind of had a pretty substantial sell-off. But it's had these runs where it just took off and then it settled down, took off, settled down. I mean, these charts are like, wow, so much volatility. But hey, right now it is trading, I think is it an all-time high? Yeah, all-time high. And that's phenomenal. Go AMD. A lot of things have kind of gone their way, and that is great. Congratulations, Mike, and everyone else that owns AMD. This has been an absolute winner. What I didn't see was enough cash flow. And the cash flow here to get to now they're 300 billion. I mean, you have to multiply cash times like 80. Yeah, and that's just, I can find other semiconductor stocks that their fundamentals look better. But I think those that understood that, hey, their technology is going to be a game changer, they're winning. And I just don't go that far with semiconductors. I believe they're cyclical, and that's why I missed on AMD, but it's really working for investors. Congratulations, guys. I hope it goes up another 70 some odd percent, another 75. That is awesome. And I think the last 5 days, it's gone up 30%. Look at that. Oh, man. Fun times. Must have been really, really fun. Yeah. I'm going to show Baba because it's kind of like, you're on a long-term journey with some of these stocks, and this chart, this stock was really, really appreciated 5 years ago. Sold off like crazy, and it's grown. Okay. It's not like, oh no, these guys are operating terribly. No, they've continued to grow and they become massive. And now they are the leader in cloud infrastructure in Asia. Just a really, really strong position. They're the AWS in Asia. They're also the e-commerce giant in Asia. So they're the Amazon in Asia. Charlie Munger really believed in these guys. And I think part of the story that I like is I love Amazon here. I love Google, Alphabet, Meta. I love my American stocks. I think the American economy is phenomenal. There's a lot of people in Asia, a lot of people in China, and they work hard and they make money and they spend that money and they save that money. And they're going to need Alibaba. They're going to need their version of Amazon so that they can buy stuff. And businesses need their version of Amazon for cloud infrastructure. And that Amazon for Asia is going to be Alibaba. Well, back to we're on a journey with these stocks. I might be able to show this better if I move over to this look. I've owned BABA for a couple of years, thinking the market doesn't have BABA right. It has it wrong. And I ended up being right. It took a while, but I've made a really, really great return on Alibaba. And I think this is going to be Salesforce, Adobe, Pinterest. Those stocks just have terrific fundamentals. They have good businesses. The market just hates it for a while, like it hated Alibaba, like it hated, Netflix, like it hated Meta. I mean, it hates these stocks, and it's just like kind of insane. Another recent one is Uber. The market got in its head, oh, Uber's vulnerable to the robo-taxi threat, and it sold it off. And I don't know if that really shows it. Yeah, it doesn't show it all that well, but I can tell you, I picked up shares of Uber at great prices because the market gets in its head. And I think this would show it right here. Just after, so there it sold off with everything else. But here is where it sold off due to the robo-taxi scares. And I was buying Uber shares left and right. This business is going to be worth a lot more. They're the leader in ride sharing. They have the most customers. And since its low point to where it's at now, 63% over the course of 10 months. I mean, it's just been a winner. So we got to stick to a process where we see value, we see good businesses, we see growth rates, we see profits, we see a very good weight of value, and exercise some patience. And good news is, if you're diversified, which I know you are, you just kind of look at CRM and Adobe over in the corner and you're like, I don't get those, but you know what? I'm going to celebrate my wins and focus on the stocks that are flourishing on the other side of the portfolio. So Fortinet, look at that. I don't even know my own portfolio. Wait, no, I remembered Fortinet, but Zscaler was the stock that I was thinking of. Thanks, Mike. All right. So Zscaler worked for me and it made me some money. Good deal. I'm hoping, and I think I'm going to be right on Fortinet. Yeah. Thanks, little Jay. Good to see you. Great to see you. All right. David Knight, thanks for joining. Fallsgrave. Let's see here. So Reddit has been talking about Root. Yeah. Yeah. And if you think about these businesses that kind of think outside the box, like Uber disrupted the taxi business, which was not that fun. One time, just quick story. I landed in LaGuardia, New York, and I don't know New York, but I get in a cab, and this poor cab guy, I'm like, I need to go to this address. And he looked at it and goes, oh, that's a really short ride. And I'm like, oh, I'm sorry. I'll give you a big tip. And the whole ride there, the guy yelled at me like, oh, you know how long I've been on that line? And I'm like, I'm really sorry. I will give you a big tip. And he just rode me all the way until we got to the location. I'm like, all right, that's taxi service for you. I hate it. In a different occasion, I rode a taxi back to New York and I had to use an American Express card. And the taxi company was just, in they charged me like, and I'm not kidding you, it was like $12 transaction fee to use a credit card or to use an American Express card. I just thought, man, talk about gouging. There's like complete disrespect for the customer. And I'm like, man, I can't wait to never have to take a taxi again. I hate to say that, but just the experiences were so bad. Uber is so much better, and you get to the feedback loop. If an Uber ride goes bad, you just give them a 1 star, and you let them know like, hey, I didn't like this or that or the other. Most of my rides are good, and I'm not out to getting anybody into trouble, especially knowing that that's their livelihood, right? 99 out of 100 rides on Uber for me have been positive. And I would say 99 out of 100 rides on a cab have been not positive. So it's been a total disruption of the cab companies. Well, Root, in a way, is trying to disrupt the insurance business because the insurance business is hung up on this old model. And I think if they're successful, it's just going to be huge. It's going to be like Uber. It's going to be like Robinhood. It's going to be a big company. So we'll see if it happens. And they have good fundamentals. So, that's why I'm in the stock. So Root is diluting with new shares. Let's take a look. Let's see what that's about. And I think we're going to get into a conversation piece that I certainly have an opinion on. And so here's their shareholder letter. Here's their SEC filing. So 10Q. And you know where I could show this better? I could just skip to this. It shows better on stock analysis. So we're going to go to the balance sheet. That's where the balance sheet will show you the share count that's available on the stock. So this is a young business, and we have give me a second. I thought it was here. Preferred convertible, paid in capital, treasury stock. Okay, shares outstanding. So these guys, they went from 13 million, 14, 14.2, 14.6, 15.2, 15.45. So I understand that dilution. Couple things going on. First, they're probably granting their employees shares. And the only way you're going to attract talent when you're a small company like this is we're going to give you shares. And if this business makes it, your shares are going to be worth a lot of money. And you need that talent so you can outmaneuver your competition. It's a necessity. All the technology young companies had to do this back in the day. So to me, this is just a normal business necessity for a small business. So I don't see it as a big giant problem. I see it as just a necessity. And you think about an employee, right? Let's say you have a terrific software engineer, educated, has good experience, and they have an offer from Apple. Apple says, hey, we're going to pay you a really nice salary, good bonuses, and we're going to give you a couple shares. Not that many, just a couple. And along comes Root and says, we really want your skill set. Come work for us. We can't give you the security of an Apple because that's a giant business. It's going to be around forever. Great benefits. Can't give you that. Can't give you as high of a salary. But what we can do is give you more shares. And if this business works, your shares will be worth millions. And that's what attracts the talent. And it's a necessity. And once they get bigger, they don't have to do it as much. But that's just welcome to capitalism and welcome to how these businesses have to operate. So I don't look at stock dilution as a giant negative if it's being done for that. If the company is in trouble and they're diluting shares, that's a different animal. I don't like that. So I do like copper. Yeah, I think copper is great. If you can figure out how to get a source of copper, you're doing well. Little J, I've jumped into Fortinet. Nice. Stick to it, buddy. Long term, keep learning. You'll make lots of money. AMD. Oh, man. You know, maybe they will challenge NVIDIA. We'll see. So, yeah, I mean, Baba's one of those stocks I'm going to keep for a while because I just think they give me exposure to China and Asia, and I don't have a lot of exposure. I own Baba. That's my biggest position, pretty substantial position. Then I own some Futu, which is doing phenomenally well. And I started buying into C, C Limited, SE. And that stock's just gone gangbusters. And it's a small position. I'm just getting started. I don't want to jump in head first because they're just been killing it. I mean, 100%. Look at this chart. These guys fell off the cliff, but look at that. They went from $38 a share to $191. Oh man. These guys, and they're just tearing the cover off the ball, man. 34% growth on a big number. And these guys are in a desirable industry that has good margins, great. Look at this cash flow growth. Overall, this is what does this business remind me of? So e-commerce, digital financial services, digital entertainment segments. So it does like videos and stuff. So they're a little bit like a Google Alphabet in Asia. And man, they're getting it done, just killing it. So I'm started a position here, and that's my exposure to Asia. And I have an ETF. It doesn't have a lot of money in it, but so any position on Van Halen. Well, Van Halen is a band, and I am the youngest of 7, and 5 of those are boys. I have 4 older brothers. And when I was 6 years old, my oldest brother was a teenager, I think. And I grew up listening to Led Zeppelin, Van Halen, Pink Floyd, and Van Halen just sounded like the best thing ever to me. And I've always been a fan and loved to listen to their music and went to their concerts. And Eddie Van Halen passed. And one of the things that I thought was cool is I went to see Van Halen in 1988. I was a youngster. And fast forward, I went to see Van Halen with my 2 sons, and one of my sons is a big musician. And we saw him in 2016. And they played so well. And they're from Southern California. I live in Southern California. And my boys love the music, and my wife and I love the music. It was a pretty cool family experience. So, yeah, Van Halen. I'm big on Van Halen, and rest in peace, Eddie Van Halen. To the best guitarist, me growing up. It's a sad story, but the other guitarist that rivaled Eddie Van Halen was the guitarist that played with Ozzy Osbourne for Blizzard of Oz and Diary of a Madman, Randy Rhoads. The guy was phenomenal, and he died in a plane crash at a young age. And yeah, so I grew up with music, love Van Halen. Thanks for asking. Yeah, so good stuff. Yeah, man. Yeah, Ozzy, rest in peace. And you think about like the music scene, it's pretty neat to see from an investing perspective how the eras of music have gone, right? Like in the days of Elvis Presley and Roy Orbison, Johnny Cash, I mean, those guys are legends. They sold so many records, and they, records, they cost, a person money, quite a bit. And the company making them would have to create a record, album. It was more expensive. Distribution was more expensive. Fast forward CDs. Fast forward, if you guys remember, Napster put the music industry on its knees. And Napster really paved the way for what is Spotify today. And Spotify now, man, you've got a library of every music, every song that you can think of in your phone. It's so phenomenal. Our music experience is so different now, for the better. And Spotify is really valuable. Speaking of which, I noticed that Spotify was getting killed. What's going on with Spotify? I've always found that stock to be too expensive. Now today, not so much. Yeah, I kind of noticed that it was selling off the 1 month, year to date. It's still doing really well. And the thing I don't like about Spotify, I love the service, been a Spotify customer for a while, is this is a big cap, right? And when you look at that big cap, you're like, okay, 14% growth, and the free cash flow is not all that impressive. 2.8 billion. So to get to that $140 billion market cap, I'd have to multiply this times 45, 50, and it's only growing at 14. I would say like maximum, I would multiply it times 30, and that gets me to like 75 minus debt. So this company I love, but look at the gross margins, not as high as like a Meta, not as high as other businesses that are in this neighborhood. And the reason for it is they have to pay the musicians, they have to pay the artists. If somebody plays, a song, they got to pay that artist. So that keeps their profits down. But investors really love this stock. I think because people can really easily understand, okay, this is Spotify. I have the service. It's a really good business, I think. And I would agree that it's a really interesting business, but you got to study the fundamentals and compare it and see which one's more profitable and going to be worth more over time. All right. Yeah, the CEO of Spotify stepped down. He is the founder, by the way. Pretty awesome story. If you want to, I mean, a lot of founder stories are awesome. His is really, really awesome. It's a second business he started. Yeah, there you go. Crazy train is a metaphor for the market. Yeah, good to see you, Mike. All right, guys. So it's good to check in. Thanks for checking in with me. I've got some stocks that I wanted to take a look at if you guys wanted to look at them. And if you guys have any other stock, just pop them in the chat and I'll try to keep up with the chat. AppLovin. So AppLovin sold off hard yesterday, and I kind of thought it was a head fake. And the reason for it was we heard this story before. We heard the same story, which was these guys aren't using the private data for users appropriately, and then the stock bounced back today. So yesterday was down like 12%, 13, 14% in after hours. I bought shares, and it popped 7.6% because this business is really, really good. They make, I mean, their fundamentals, and I'm going to show them to you. This is what I'm looking for. This is the best business in the ad tech space. They're growing really fast and they're accelerating their growth. They figured something out, and look at that, year over year. As you get bigger, it gets harder to make your percentage growth go higher, but they are really accelerating their growth. Phenomenal. Not only that, like I just showed Spotify and complained about their gross margins that were 30%. Gross margins 78.6. That's why I complained about Spotify. I'd rather own AppLovin. They make far more money. Look at this profit margin, 42%. So if the market wants to give me a head fake, I'm not going for it. So I bought more AppLovin last night. I'm glad. This is a really, really good business. And now, this thing was fairly priced when I bought it. It's really hard to buy into it because it's just a good business. Everybody wants a piece of it. 352%. These guys are the real deal. $213 billion in market cap. AppLovin was a really, really easy pickup last night. I'm glad I did so. And Little J, I am planning to stream tomorrow morning with Daryl. And man, I've been learning a ton from Daryl and listening to the way he charts. I'm a fundamental investor. Obviously, you guys know me, and I like looking at fundamentals. But I'm beginning to really appreciate how the charts can tell you how a stock is setting up. I get that. I'm still going to keep being a long-term investor. But I think it's a good combo. And we're going to stream tomorrow, 6 a.m. Pacific, 9 a.m. Eastern. Tune in. Love to have you. It should be a great stream. And then Shadow Guy, you passed AppLovin headquarters in Palo Alto. Cool. Yeah. That's where they're at. Very cool. All right. Next stock I wanted to talk about is PayPal. PayPal has been really testing investors, right? It's like everything tells me this stock's discounted, but they just don't grow really fast and the market doesn't get overly excited about them. And PayPal has some really good things going for it. The Venmo business, really exciting business. That's probably, if I'm not mistaken, the most heavily used peer-to-peer payment platform that you pay, people that and like your friends and stuff. You can transfer money. And PayPal is now beginning to monetize that. They should do far more of it. They should have been doing far more of it because their growth isn't fast enough. If they could start growing, PayPal is going to get really exciting. Now, over the last couple of days, I've noticed that, hey, this thing's beginning to show signs of life. So this is going to be on my list of stocks to get Daryl's opinion tomorrow morning. Hey, show me the charts on this. What do you think? And try not to influence him too much. Just let him tell me, what does he think? And sit back and listen and learn. Because this thing hasn't done well, right? For the 1 year, not good. But they have phenomenal value. They have a low PE. The growth isn't overly exciting, but it's positive. And they're big, $32 billion in revenue. That is not small, folks. They make good profit, great cash flow. What's missing? What's the deal? Well, if they get on a nice long-term, appreciation trend, I'll probably throw some more capital into PayPal, but I just want to make sure I don't do it too soon. So PayPal caught my attention. All right. This looks like the chat is coming alive. Little J, Yeah, it was super interesting. Great video from Daryl. Big house juice. I think SoFi, just on their story of what they're trying to do, which is be a bank and a financial services company that kind of looks at the modern customer and then designs its software and its experiences around the experiences that customer wants. They're going to be successful. And I think SoFi is going to be good. Valuing SoFi is hard. It's they're not in my favorite industry, banking. Banking's good, but it's not great. So haven't been in SoFi, but those that have been rewarded. I think the story alone on SoFi is a good part of the investing, thesis on the stock. And I think I have a valuation on SoFi. I have SoFi priced 27% too high. I think each share is worth $20.61 and it's priced at 28. That's me. I think you should stick to what your conviction, right? It's just one opinion. Because SoFi's work for investors, and I don't want, it's, I like certain types of companies and kind of don't like certain types of companies, but the next investor might understand those industries that I don't like better and have a better rate of return. Year to date, 82%. That is phenomenal. And if you're sitting on great gains, I'm sitting on great gains on some stocks and I'm not selling those shares. I want to hold it like Alibaba, Robinhood. These stocks are flourishing and I'm keeping them. A-Lab, Arista Labs. So I think SoFi is getting it done for investors. Herdo. You came across an ETF bug. Let's take a look. So these guys have a cybersecurity ETF. I think they're going to show the holdings. Zscaler, that's been doing well. CrowdStrike, Palo Alto. This is a good idea. It owns all the cybersecurity stuff. This is a very good idea. How's it been doing? Let's see. Year to date. I would have thought it would have outperformed, but it's underperforming the S&P. I would have guessed that it outperformed the S&P. And it underperformed the S&P for the 5-year. That's a surprise. What do you think of the risk to PayPal? I mentioned if the U.S. banking system becomes more like Europe's. I think it's going to really hurt. When I think what you're referring to is the banks, and JP Morgan's leading the charge. They're like, hey, you know what? We don't want like account holders to be able to transact in and out of their banking accounts all that easily. So they want to charge like Venmo a transaction fee so they can make some money. And I think the banks are that's kind of a short-term gain with a lot of long-term pain. And that's real. And if they do that, they may hurt PayPal and Venmo. But if they force all these like peer-to-peer solutions off the banking system because it becomes too expensive and it goes over to crypto, then they kind of dug their own grave. It'll just be a giant push of consumers. Hey, you should really have a crypto wallet. then you can have peer to peer, and it'd be basically instantaneous and free. And you avoid the bank and you avoid the fees, because banks, this is their operating system, is figure out how to charge fees to the consumer and then try to make money that way, which is FYI, consumers are a lot smarter and we hate that. That's why we hate banks, fees. So if JP Morgan wants to go ahead with that, that's kind of a typical legacy bank thought process. Yeah, go for it. And you're going to wake up and the whole market left you and you're like, whoa, hey, what happened? Consumers don't want to use banks anymore at all. They just want to they want to have crypto wallets, and they want to have like a system that is really, really fast and literally free. And that's what's going to happen. So not quite what I mean. Okay. Yeah, I heard a story from JP Morgan that they were posturing that they wanted to charge these fintech companies, for the transactions that are coming in and out of their institutions. And I thought, yeah, that's kind of ridiculous. It's probably going to be a bad idea for the bank itself. So long-term thesis on Ethereum and Bitcoin. So, I think that the crypto space is beginning to form some real use cases. Bitcoin, let's start off Bitcoin. Bitcoin's easy. Bitcoin, I started buying Bitcoin 2017, and it was a little bit of like a laboratory kind of test of, well, let me buy this, what's the worst that can happen? I lose a little money and I learned something, and I studied, what is a blockchain? What is Bitcoin? Read the white paper, and I started investing. I actually was following my son, and at that time, right, 2017, he's 21 now, so that's 8 years ago. He was 13. He really got into Bitcoin at that age. So my long-term thesis on Bitcoin is, this is like gold. Now, my whole life, a lot of people have a very high appreciation for gold. They feel security with gold. They feel like, hey, I have wealth in the palm of my hand or in the safe or somewhere where I have that gold. Got it. And that's been the case for thousands of years. That's been the feeling. I don't get that feeling with gold. I don't get it. And that's okay. Other people get it. They should invest in gold. I don't invest in gold. But Bitcoin, for somebody who's got a lot of technology background, as I do, I've worked in technology for 30 years. I get it. Yeah, this is a little bit of, you got to, like in the Matrix, pick the colored pill you're going to take. You're either going to be a believer or you're not going to be a believer. And that's okay. If you're a non-believer, that's cool. I didn't get gold. I don't invest in gold. But I don't criticize. I don't second guess the person who likes gold. Go for it. Knock yourself out. Gold's been killing it lately. Awesome. Bitcoin. In 2017, a lot of old investors were like, you're a fool to buy Bitcoin. And, I was like, wow, well, maybe I might lose my money, but interesting. And these are like the smart voices. Oh, you're a fool. Like, you're out of your mind, right? Well, back in 17, you're buying coins for $2,500. It's 120 some odd dollars now. $121,000. So the same guys who were like, "Oh, you're just dumb for buying Bitcoin at $2,500. That thing is worthless." Well, again, back to gold. I get a lot of people like gold. They appreciate gold, but it has no value to me. I don't like wearing jewelry. Okay. And I can't make anything out of it. It's not like I'm going to make, something that is going to be functional. So over time, the investing community, when it hit to like, let's say, went up to like 15,000, it had this peak right here. It went up to like 15,000, 16,000. The investing community started to change its tune. Like, well, I guess if you're going to invest in it, be careful with it, like yada, yada. And then it, just started killing the returns of like just outpacing equities. Got up to 64,000 in 2021. Then the investing community was like, whoa, you could have taken $2,500 and turned it into $64,000, right? I took some of now I did not invest a lot of money back here. I'm sitting on really good gains, but just imagine if I would put 100 grand in back then, but I didn't do that. Anyway, so it just has continued to climb. And now a lot of people get it, which is this is a rare digital asset. And the thesis I had here is the same thesis I have here, which is, in case you haven't noticed, I'm streaming through our internet and people all over the world are watching this stream. We are in the digital world. We do so many things in the digital world. And that's a fact. So to have a store of value in the digital world, to me, goes hand in hand. I'm very comfortable with that concept. And I was very comfortable with it here. I actually thought people who argued with that concept are being irrational. We do everything online now. So why wouldn't we have stores of value that are born online, born to be fully digital? So Bitcoin's going to continue to rise in value over time because it's rare. Ethereum is a layer 2 network that is going to enable better functionality, and Solana as well is going to enable better functionality. And projects will be built on Ethereum that would be interesting. If you have Ethereum, you have to stake it, or your Ethereum is losing value because other owners of Ethereum are staking their coins and they're being rewarded in ETH. And that reward is liquidating all the overall number of coins available for Ethereum. So if you're not staking, you're kind of falling behind a little bit. So you want to stake your Ethereum. I sold all my Ethereum. It didn't do as well as Bitcoin, and I continue to hold my Bitcoin. So my long-term thesis is it's going to just continue to accumulate value. I'm excited about crypto, and I'm playing it through primarily Coinbase. I think Coinbase is the most informed, capable, publicly traded company that is 100% crypto focused. They're the one, not Robinhood. Robinhood trades Bitcoin, got it. They do a couple of things around crypto, got it. I own Robinhood. I love Robinhood. Robinhood is not crypto 7 days a week, 24 hours a day, but Coinbase is. And I think Coinbase is going to be worth a lot of money in the future. They already have returned a great appreciation, but they're trying to build big rails. They're going to be really valuable in the future. Also, keep your eye on Solana. Saw a very good interview on the founder of Solana. And what he's built is going to be very valuable. So I think studying crypto, if you want to be an investor for the next 20, 30 years, that's kind of a necessity because that's where we're going. And we're leaving things that, we used to do. But in the future, there's going to be a lot more done on the crypto rails. All right. Cartel Raider, what's up, man? Good to see you. All right, guys. So let me shut it down. Good stream today. Really good conversation with you guys. Really enjoyed it. I hope you found it interesting. And it's bye for now. I'll stream in the morning with Daryl. And, it'd be great to, in the morning, we can take a look at some stocks that we think are going to move. Maybe some stocks that sold off today and see how they did tomorrow. We'll take a look at PayPal in the morning. We'll look at Instacart, ASML. Maybe talk about Baba again. But it'd be great to have you if you can make it. All right, guys, have a good night. Thanks for tuning in, and I'll talk to you soon.